morning, it's Wednesday the 22nd of February. This is your update from Phoenix Blue, presented this morning by Tom Colley. Okay, markets yesterday, we appeared to have some dollar strength through the morning. We were hoping that that would follow through, but somewhat like the middle of last week, we saw it die off quite perceptibly through the afternoon in the US session. Before we look at the charts, let's look at the news. Okay, we had inflation report hearings out of the UK. The UK was bearish into that dollar strength coming in yesterday morning, but it did reverse most of that position by the close of the trading day. On the Kiwi, we had the dairy price index, which came below the previous. We don't have a forecast for that. We then had a speech from the Reserve Bank of Australia, Governor Lowe. He said he would like to see lower rates, but that wasn't currently possible because of the overheated property markets in Sydney and Melbourne. He previously said that in an ideal world he would see the Aussie itself at a lower level. Again, clearly that factor of not being able to reduce rates, the rate statement recently was quite bullish, so we've seen some Aussie strength, and the Aussie was in fact the strongest currency, or one of the strongest currencies, along with the yen versus the US dollar yesterday. Going into today, we've got the second estimate gross domestic product for the UK, Canadian core retail sales, and at 7 o'clock we've got the FOMC meeting minutes. But I've also highlighted FOMC member Powell Speaks, which is an orange flag on Forex Factory rather than being a high priority. The reason being is we had a lot of FOMC members talking yesterday. We had the member Harker, who is known to be a hawk, but was commenting that he would support a rate increase at the next meeting in March. Another member who is a non-voting member, Nesta, was comfortable with rates rising. So we had a number of other Fed speakers out, so I'm really just aware of what's being said at the moment. They may be being wheeled out because the meeting and the minutes of that meeting predate some very, very strong data last week, so they may be trying to slightly make the emphasis of those minutes slightly more hawkish in the light of that. Who knows? Then overnight we have private capital expenditure on the Aussie. Okay, over to the charts, and as we said yesterday, we had a bullish move on the dollar index here to the long side, coming in and up to about the 10150, which was a key level for us. It then pulled back and recovered slightly into the end of the day. We can see this morning when this slide was taken, we have breached that level now. We look to be the long side, but what's important to remember about the dollar index, and the next chart will emphasize this, is you must always remember what the makeup of the dollar index is. It doesn't have an equal weighting of all the currencies. By far and away the strongest weighting is 57%, which is weighted in favor of the euro, whereas the Japanese yen is only weighted at 13.6%. So you are always going to see the dollar index reflecting moves versus the euro more significantly than other currency pairs. We do tend to use it as a measure of dollar strength, but you must always relate it to other charts. And here is the yen, and what we've seen so far today, instead of a bearish move on the yen, a bullish move on the yen, on this yen chart, as we saw on the euro, we've got a bearish movement this morning. We had this same situation on Friday when the yen was moving in the opposite direction. Interestingly, we've had the Bank of Japan President Kuroda quoted overnight as saying that the Bank of Japan remain ready to ease further, although they don't see the deepening of the negative interest rates as being part of that policy at this moment in time. So potentially the Bank of Japan are concerned by the relative strength of the yen relative to other currencies, particularly with it not being inverse to the dollar itself. Over on the euro, well, we can see this is where the weakness is. This is what's driving the dollar strength as it appears on the dollar index. We've clearly broken this level that we failed to break last week when we saw price come down, and surprisingly reversed extremely strongly at that level. We took that to mean that there was uncertainty in the market, that traders were looking to take profits, smaller profits, take profits sooner than they normally would. As I say, this morning we've seen a significant break through that level. If we get a daily close below here, a significant daily close, we will be looking tomorrow for a pullback into that level to take trades to the low, to the downside, and this level through here at about 103, let's call it 103.50 zone as a target. Any break below that, and that's effectively new lows for the euro, and potentially then heading for the parity that's been talked about for quite a while. Okay, over on the Aussie, well, as I've already said, the Aussie, along with yen, was the strongest currency versus the dollar yesterday. The weakest currencies were the euro, and let's call it its pair, the Swissy. That makes sense based on what we've just said. We can see we came down, that dollar strength pushed the Aussie down, but it did recover, and so far this morning it's moving to the long side on a bullish basis. That fits in with the picture that we have. We have an order here waiting at about 77.30, 77.35. But we do see potential also at 78.40, 78.35 for another market cap type order, which would coincide with this trend line confluence through there. We don't know exactly what's going to happen. We don't have at this moment in time a commitment of traders signal, which we had previously at this high here. We may find if we get through this level that we do get that signal, and then we have more confidence in the downside. But we've got a clear level through here. We are trading that level as a market cap, so we will be waiting to see what happens there. The other market of interest yesterday for us was crude oil. Crude oil's been clearly trading between 54.50 and 51. 52.50 between these two levels here. We had a push up yesterday, potentially a false break that tested 55. I know some Phoenix Blue traders entered this market at that sort of level on an hourly chart. Personally, my plan for the week was always to trade the range on a 4-hourly basis off 54.50. So that's exactly what I did. I waited for a 4-hour close before that. And then placed my order. It's pulled back, it's triggered in, and we're looking to trade this down to the short side to the bottom of the range. We have a commitment of traders signal, which suggests the commercials are extreme positions. Also, the non-commercials are at an all-time high position. That normally is what reflects a commitment of traders signal. We are more biased to the downside because of this, but we'll be looking trades to the bottom of the range with the potential for it to return back up. But we will be watching the bottom of the range because this could play out with a bigger downside move, which would be our preference over an upside move and a break up to 60. We are, of course, prepared for either scenario. Okay, guys, that's it for today. Be careful with that dollar strength. Remember what we've talked about in respect of it being the dollar index not being an exact measure of dollar strength, and you need to look across the charts. Hopefully the euro, the Swissy might give us opportunities there, and we might see some follow through later in the day. Beware of the FOMC meeting minutes, 7 o'clock this evening. Don't be looking to open trades around there, be aware of that. Although as I've already said, personally, I think we will have a relatively quiet release there, simply because we've had that positive data and the Fed members speaking it up subsequently. Okay, thanks for listening. We'll be with you again in the morning. Have a great day's trading and take care.